Hi, my name is Udit and I work in Germany as a finance manager. Yesterday at work, I was having a casual conversation with one of my colleagues. He is someone who's heavily invested in NVIDIA and he has recently invested in NVIDIA after the stock has rallied a bit. In the past 5 trading sessions, as we have seen, the stock has fallen down by approximately 16%. And this is primarily because of the potential impact of a new Chinese AI startup called DeepSeek. This is perceived as disruptive towards the outlook that the investors have for the AI industry at present. And because of this, we are seeing a rejig in the prices. However, this video is not about my friend, this video is not about NVIDIA, and this video is not about AI. It talks about the behavior of markets in general. We all know that markets are a forward looking mechanism. What they do is that market participants come together to approximate how the future is going to look like, and on the basis of their collective wisdom, they try and put a certain valuation to an asset class or a stock price in particular. And all the market participants, on the basis of the collective wisdom of the crowds, agree on a certain price, and this becomes the price that a stock commands in the market. Sometimes there is over optimism and sometimes there is over pessimism. That also happens in life, wherein our present situation is extrapolated to get the outlook of future. Sometimes if we have had a bad day, we try and project it and start getting a bit depressed about things. We don't have a very positive outlook towards life. Also, if something good happens in life, we become overly ambitious and optimistic. We think that this is how it's going to continue for the rest of our lives. Unfortunately, that is not the case, and this is where we go wrong both in life as well as in markets. So, in case of Nvidia or any other stocks which are priced to perfection, what happens is people don't see any disruption coming in. They believe that the high growth that they are seeing right now is going to continue. And once everyone agrees to this philosophy, the valuations start to increase. And as the valuations grow, it becomes much more difficult to manage the downside, to manage these kinds of disruptions that may come in. And disruptions may be of different kinds. They can be technological, like we saw in this example. They can also be geopolitical. For example, the Russia Ukraine war that happened a couple of years ago, or any political changes that happen in the world. There can be some natural events which can be potentially man made too, like COVID. There can be certain economic events which we have not foreseen. So all these need to be factored in our decision to invest, because ultimately the rule of the markets of investment is to not lose your money. Growth will come by, but at the same point of time we need to preserve our capital. We need to preserve our hard earned money. We need to ensure that we don't lose the money that we have earned through our hard work. For that, we need to cultivate an investing philosophy which factors in these risks. And how we can do is we need to understand, we need to question every investment decision that we make. We need to question by asking what can go wrong and what is the price that I'm paying today for the future growth, and are the risks that I foresee priced in the stock. Can anything go wrong, which it will? So did we price it in the decision that we are trying to make today? So friends, this is a very important step that we need to follow. We need to understand both on the upside as well as on the downside. Sometimes there's extreme pessimism in the market. People believe that nothing is going to work out. The stocks are hammered, the prices are at rock bottom level. And this is where someone who is not emotional about the stocks, about the country, about the economy, about the markets in general, that is where this kind of a person tries to find opportunity to invest. And also in the other extreme, wherein there is extreme of euphoria, everyone believes that the future outlook is super bright, that is when they get careful. So this is something that we need to learn to progress on our investment journey, to be cautiously optimistic. It does not mean that we become pessimists in our life, because the nature of the markets in general is favoring optimism, because we believe that the future is going to be bright, that there is going to be growth. That is why we invest our money for a better future. But at the same point of time, we cannot be overly optimistic beyond practicality. So, this is a fine balance that needs to be struck. Like I mentioned in my previous video, the quality of equanimity is something that we need to cultivate. We need to keep ourselves calm in situations wherein extreme positivity is there, and also in situations wherein there is extreme negativity. And this act of balancing is the most important part in our journey. So, friends, let's embrace dynamism and volatility both in markets and life, and become better human beings, and in that process, better investors. Thank you.